Hello, welcome back to Audit and Assurance class, and we'll be discussing on substantive audit procedure and testing, substantive audit procedures and testing. And in doing so, the module will help us to be able to understand or define substantive procedure and distinguish the different types. Also, we'll be able to design risk-based substantive procedure for key financial statement areas. Yeah, we'll be able to apply professional skepticism and judgment to evidence gathering. And lastly, we'll be able to integrate analytical procedures and tests of details. What are substantive procedures? These are actually audit procedures performed to detect material misstatements at the assertion level. They are procedures which are actually carried out to be able to detect any form of material misstatement, that is those mistakes that can actually affect the decision making of management at the assertion level. And we have two types of substantive procedure. The first is the substantive analytical procedure, and this evaluates financial information via analysis of relationships. An example of this is comparing current gross margin to prior periods. And we have the test of details as another type. And this examines individual transactions, balances, or disclosures. And an example of this is vouch a sample of sales invoice to shipping documents, and the relationship with control. The first is high control reliance, and this can reduce extent of substantive procedure. Another is the low control reliance or high risk, which must increase substantive procedure. And but substantive procedure are always required for material accounts. In designing effective substantive analytical procedure, the following are very important to note. When do we use it? It is best used for assertions like completeness, valuation, and reasonableness, where predictable relationship exists. And key design consideration include one, suitability, that is the relationship stable or predictable. Another is the data reliability, and this deals with is the underlying data accurate and complete. Another is the precision or expectation, and it asks a question of, can we develop a precise enough benchmark to detect a material misstatement? And lastly, investigation threshold, asking a question like what difference from expectation triggers follow. And common technique used in this is trend analysis. We also have the ratio analysis, we have the reasonableness test, we have the regression analysis, we have the reasonableness test, and we have the regression analysis. And the rule that guides it is unexplained significant difference must be investigated. Unexplained significant differences must be investigated. Let's look at substantive testing of cash and receivables. We'll be taking it one after the other. And the first is for cash, and this on high risk of misappropriation. And the key assertion is existence and rights. And the primary procedure used is bank confirmation, that is direct external evidence. Another key tests include bank reconciliation, that is verifying accuracy, investigating old items. Another is cut-off testing, which ensure transaction is in correct period. And the last one under this is the physical count, if held on hand, if there is cash held on hand. physical account would work. And under the account receivable, talking about the high inherent risk, key assertion is one existence and valuation. Existence and valuation, and primary procedure is an external confirmation, which can be positive or negative. And other key tests include allowance for doubtful accounts, which evaluate management's methodology, and assumptions. And the next is the subsequent cash receipt testing, which provides evidence of collectibility. And last is the cutoff testing, which is tied to revenue recognition. Testing for inventory, substantive testing for inventory, it's actually talks about why high risk, and it impacts both balance sheets and income statements, and it's susceptible to theft, obsolescence, valuation error. It is susceptible to theft, obsolescence, and valuation error. And the key procedure under substantive testing of inventory include physical inventory observation, and it's required for existence. And the role of an auditor is to observe claims counts procedure, perform independent test count, and evaluate control over shipping or receiving cutoff. Another procedure is the valuation testing, and for this, this will require the lower of cost and net reliance. It requires the lower of cost and net realizable value, and it tests count accumulation, material and labor overhead, and also it reviews subsequent sales to access the NRV, and lastly, it analyzes inventory turnover for obsolescence. And another procedure is the cutoff testing, and for this, it ensures purchases of sales are recorded in the correct period. They are recorded in the correct period. We have substantive testing of PPE, that's property, plant, and equipment, and also liability. And for PPE, we have key assertion for existence, right, and valuation. And the key procedure to be used or to be put in place is one, verify addition, that is inspect invoice and authorization, also to verify disposal, that is recalculating gains and losses, and then testing of depreciation, which is to review estimates, useful life, residual value, and to recalculate. And the last one is to accessing for impairment, and this deals with reviewing of indicators. And for liability, completeness is key risk, and this talks about under the account payable, you have to search for unrecorded liabilities. For long-term debt, you have to confirm with lenders, review agreements, test interest expenses. And for accruals, you have to evaluate methodology and assumption. And for contingencies, there is need for inquiry, review minutes, contracts, and legal confirmation. We move to the substantive testing of equity and revenue. And when we talk about that of equity, it's actually few but material transaction. And the key focus is on authorization, accuracy, and disclosure. And the procedure then put in place is one, to review article of incorporation and board minutes, to verify share issuance or repurchases, to test dividend calculations and authorization, and lastly, to review complex instruments, like stock options. And for revenue, higher fraud risk, shows overstatement, and key assertion is on occurrence, cutoff, accuracy. The procedure is one to understand revenue recognition policy and complex contracts. And the second is substantive analytical procedure, that is like trend or ratio analysis. Another is test of details, which is vouch sales to contract or shipping document. And lastly is the cutoff testing, which talks about the critical at period end. It is actually critical at period end. Lastly, we look at the integrating procedure and applying professional skepticism. And the audit approach is integrated, and that is inventory, test, support, cost of sales valuation. Also, revenue cutoff testing ties to account receivable existence. And lastly, under the integration, analytical procedures on revenue involve receivable valuation. And for the professional skepticism, which is actually crucial also, questions aggressive revenue recognition. It also corroborates management's explanation of for unusual trends, and lastly, it search diligently for unrecorded um, liability. So the auditor must question aggressive revenue recognition, must also corroborate management explanation for unusual trends, and also such an auditor must search diligently for unrecorded liability. And lastly is to investigate all confirmation, exception, and count discrepancies. In conclusion, substantive procedures from the core of audit evidence gathering, providing direct, it forms the core audit evidence gathering, providing direct evidence about financial statement assertion, and the key comprehensive nature, timing, and existence of the substantive procedure must be specifically responsive to assess the risk, and with higher risk requiring more existence and persuasive evidence. Having an understanding on how to design and execute effective substantive procedure across all major financial statement areas represent a fundamental skill for audit professional. Thank you for listening.